More.
We, of course, are always watching Wall Street closely, and the S&P 500 continues to hold on to its impressive gains, hitting all-time highs earlier this week. But the current earnings season isn't anything to write home about. Growth in emerging markets appears to be slowing down. Nick Klemski from Wells Fargo is here with some perspective. And Nick, should investors be worried at all about the recent developments?
Well, I'll tell you, investors shouldn't necessarily worry about these developments, but I think some concern is probably warranted. Obviously, each one of these developments and their outcome can impact how your investments will perform in the next 12 to 18 months. But at present, I would tell you that one of the best predictors of future economic growth, the stock market, is telling us that better days lie ahead for us. In fact, our U.S. stock market, as measured by the S&P 500, is already up 18% year to date, and we're just a little more than halfway through the year. But let's look under the hood of the recent stock market engine and dig in a little deeper to really find out what the markets are telling us right now. Looking back at the last 3 months tells a pretty interesting story. So financials, industrials, consumer discretionary, energy, information technology, and materials, in that order, are the top 6 performers. Now, what do all these sectors have in common? These are cyclical stocks whose fortunes, to a large extent, are tied to the ebb and flow of the economy. The better the economy does, the better the businesses perform. Now, on the other hand, what sectors are scraping the bottom of the barrel in terms of performance over the last 90 days? Well, from worse to less bad, they are telecom services, utilities, consumer staples, and healthcare. And what traits do these sectors share? Well, they are far less tied to the growth of the economy because we tend to use their products and services whether the economy is good or bad. Now, during the first 3 months or 4 months of the year, defensive stocks were the best performers as the markets climbed to new highs. However, it is highly unusual for defensive sectors to lead any meaningful rally in stocks for anything other than a brief period of time.